All right, guys, how is everyone doing? Paul Singh here, bullsonwallstreet.com. Today, we're going to talk about trading the third phase of what I'm calling a bear market here. Now, technically, bear markets are 20% or lower off highs. We're at about 9% right now. We were 10%. So technically, we could say call it a corrective market instead of a bear market. But to me, whatever the semantics are, it feels like a bear market. It's a rough market here. We've had a pretty big down move. SPY has gone from 292 down to about 260. And we're on the third phase, at least how I see it, in terms of there was an initial first phase. We had a little bounce. We had a second phase. And that second phase is where we made a lot of our money. And now we're starting to consolidate here. And the question is this corrective market over, or are we going to continue down and test the April lows? So this is my mindset right now. And I don't know what's going to happen. We're basically watching certain areas. Let me pull up the chart here and we'll go over exactly what I'm looking to do. So you can see SPY here. This is what we mean when we say the market. Initially, we had this first down move. Now, this was kind of a preparation move for us. Now, we traded this really well. Tomorrow I'm going to go over how we traded this entire period with my swing trade report members on Bulls on Wall Street. It's only for members. It's a group mentorship session we do every couple of weeks. We're going to go over the trading since this happened in early October. You can see I was around 22%. Now the market has gone down 9%. At one point it was down over 10%. And we are actually up 6% during this period. And if you think of alpha with that 9%, it's actually beating the market by over 15%. So we've done very well during this period. Our big trades have come on the index shorts, and then we took some little shots on longs just in case the market was going to bounce, which it didn't. But these were all very small losses compared to our big wins on the index shorts. And that's the trading style I have during these periods. Little shots, and I hit those shorts really hard when the opportunity presents itself. So we had this first phase where there was not a whole lot to do, but the good thing is our market analysis told us to be out of the market. We were only in one position when this thing started. So this didn't hit us at all. When most people were getting crushed, we knew by market analysis to stay out of the market. This was the first phase. And usually in the first phase, unless you're kind of caught in some shorts and really profit from it, usually not too much to do. If you're break even, you're crushing the market because everyone's getting crushed here. Now, the second move was where we established those shorts. And we had a nice run in here when the market tanked. And that would be the second phase. So first phase, second phase, and now we are in the third phase. We've been testing some longs, some shorts. We've made out well with the shorts. Longs, small losses, no big deal, but we have come out profitable during this period. But now the question is the sell-off over? Are we going to W bottom here, higher low here, and then eventually resume trend? Similar to what happened in 2016 here. And I should still have my notes here from when we were trading during that period. You can see here, we had this pullback, W bottom, and resume trend. Now, that pattern could be playing out here. And it also could be a version of this here, where we had the big drop in just this year, where we had the big drop, pulled back up, put the W pattern in and continued trend and tested the highs again. So we don't know right now. Now, there are some constructive things. I just put out the trade report for trade report members. And what we were talking about is, while we don't know what is going to happen, there are some things that are encouraging. One, our focus list. This is my focus list here. I'm seeing a lot more strong long setups. For example, Sina here has broke its 9. We're seeing a lot of China stocks look like they could be bottoming. Software stocks like Team are showing some strength. We've got a number of stocks here. If I wanted to add longs today, there are a number of stocks that I could use to add. Alta has been very strong after an earnings breakout. Under Armour, very strong here. Orly, very strong here. We're seeing a lot of stocks with strong patterns. So that's a positive. We're seeing more and more stocks above their key moving averages. That is a positive. So I've gone from slightly bearish to very bearish during this whole period to now I am market neutral. Now notice I didn't say I'm bullish. I'm market neutral. So I've gone from slightly bearish to market neutral. Now, if we fail here and continue down, I will go back to slightly bearish and I will establish some shorts. But if we continue to show strength, you know, the market here has crossed the 9 and put in a higher low. That's what we want to see. Now, if we cross the 50-day, if we cross the 200-day and continue up, I will start to get bullish and start to add more and more long positions. Right now, I only have one feeler long position that offers good risk reward. So that is how I am trading the market right now. Watching for these signals, either long or short, and then I will slowly establish positions. Let me do this one more time. I'm going to show you what I do if the market shows strength and we decide to get bullish, and what I'll do if it gets bearish. Right now, I have one position. Maybe in this range here, I'll add another position, something like an Alta, something like maybe even a Netflix if it crosses its 9 EMA, maybe even a terrible stock right now like NVIDIA if it crosses its 9, or go with another relative strength stocks like Orly. The point is I could add one position in this range in here. I don't want to get too aggressive. Now, if we cross the 50s and the 200s, I will get more aggressive, and maybe I go to 3 or 4 long positions, and I continue to add and take profits and add as we continue up. And if we ever do break the highs here, I would get very, very aggressive. So that is the bullish game plan, but it's just a game plan. We're not tied to anything. We should be able to adapt on a dime. So if that plan fails and we start to fail here, if the market pulls back down to this range here, let's say 266, 267, I will add a feeler short. And what I could do is short the index by going long SPXS. So this is an inverse ETF, or I could just go, I could short directly SPXL. You could do that if your broker allows you to. Some brokers don't, or just don't have shares to borrow. If that happens, I would add a short here. And then if we break these lows, I would add another short with the expectation that we test the February lows. So that's the plan right now. Watch what the market is doing and then act accordingly, taking small shots, no big bets until the market reveals itself. All right, guys. So those of you who are watching who are Swing Trade Report members, or if you want to be a Swing Trade Report member, go to Bulls on Wall Street, sign up before tomorrow, because tomorrow morning we're going to have a group mentorship session. I always do one lesson or topic. My topic is going to be how we've traded through this period, analyze the good and the bad trades, risk reward, how maybe we could have improved on this, how the things we've done well during this period. Then we will talk about relative strength stocks. I'm going to go through a list of stocks that have done very well in this market. And then we open it up to a group mentoring question and answer where members ask me anything they want.